Good morning, traders. Chris Buss here from Traders Profit Compass with your morning look at markets for Monday, June 21st. First of all, I want to thank all the new subscribers. Got quite a number of new folks that have subscribed to the content. I really appreciate that. If you're new here, I appreciate your time. Hit the subscribe button and the alarm bell. That way you won't miss any of my content, and I'll continue to work hard to give you guys actionable levels and content to get your day off to a good start. So quickly looking at equities this morning on futures, up about 0.5%. Oil's flat, gold's up 0.8, and copper's down again 0.5%. So what I want to do this morning is kind of do a reset after the FOMC meeting and kind of, reset the table where we're at and where we might be heading. I thought it would be a good idea to look at our oscillators, find out where we're at after a couple of days of selling. You can see here on the NASDAQ oscillator, we were up towards the higher end of the range, and we've come back down to minus 24, minus 25, more or less in the middle of the range. I don't think that's a big tell, other than it's heading south with more room to go if it wants to go there. This is an end of day calculation, so you can't really look at it intraday. But if we, just looking ahead, if we were to get more selling, keep in mind that this will continue to come down. And when it gets into this minus 60 level, that's usually a level where you can expect a bounce, and you can see this level has worked pretty well in the past. Obviously, there's times where it can just keep on going, but in general, 60 is a good level to gauge whether there's more selling to go or not. NYMO is a little bit more advanced. You can see we were up here towards the top of the range last week, and now we've come down all the way to minus 53. Same kind of rules apply. If you carried shorts over the weekend and you get a substantial or decent down move today, I'd think about lightening up on those. Why? Because the risk reward for staying short once NYMO goes down below 60 is diminished. So there's a little rule of thumb that I kind of got carved into my trading desk is don't fight NYMO. If you've been short, you've made money, congratulations. But there are a lot of times when people start getting short in this area down here. They say, oh, wow, we've been selling off and now we're going to plunge. They get short here. You might get a day or half a day of further selling, and then they reverse it and rip your face off. So I use these as an important gauge of where we're at. And, I tend to lighten up on shorts once we get down past negative 60 on the oscillators. So I think the real big thing coming out of Powell was the recognition that, inflation is out there. They hinted at, maybe needing to taper a little sooner than they had originally thought. That threw folks into a, not an all-out tizzy, but obviously a lot of volatility. And so here we're looking at the 10-year Treasury yields. And so we had been rising, and we got a rise in yields right after Powell, and then they have faded those yields over the last 2 days, Thursday and Friday. And that's when we got all the volatility in the banks and the commodities and all that kind of stuff. And now we're actually lower than we were heading into Powell. So that's been quite a reversal. And you can see on the indicators that we've gone bearish on both the RSI and the PPO. So the indicators are supporting further weakness in Treasury yields. And I think the number to really watch is this 1.4% right here. If that breaks, all hell is going to break loose. Why? Well, that calls into question future growth, right? I mean, if we're supposed to be having this big reopening, yields should be either stable or rising, not falling. And if we lose this support level at 1.4%, then we could come all the way down here into 1.2%, and that would be a dramatic reversal. And here's the corresponding chart for TLT. Of course, when bond yields fall, TLT rises. Last week we said, watch this 140 here back in this trading range was going to be really, really important. Well, they rocketed it higher. And now TLT is testing this big downtrend line and the flat 200 EMA. If they pop this thing at 146, there's room to run all the way up to 150 before there would be any kind of, decent kind of resistance. And, so we're at a really important level. Just technically, if this gets rejected here, the commentary would be, at least from a technical standpoint, oh, it backtested the 200 and failed, right? You came up to the 200, you came up to the downtrend line. This is where it's supposed to fail. Big downtrend, kickback rally, right into this zone. This is where it's supposed to fail. If it doesn't and it breaks out, that could portend, a bigger trend change afoot and yields falling and TLT rising. And I think it can go all the way up to 150. And if you want to play that and you see this breakout here, you can get long against 146 and then, with a stop just below trend or just below the 200 EMA and see if you get that move up to 150 or even higher. I mean, if the trend truly did change, that's a trade that could run for a while. So that's a decent setup in and of itself. And then let's look at the dollar. Heading into the FOMC, we had identified, a couple of different scenarios, things to watch. And prior to the FOMC, we were down here at about 90.66, give or take. They stacked 3 big candles. That is a big move on the US dollar, coming right up here to this 92.21 level. You can see that that's been a band of resistance going, back. They break it out here. You can see the dollar rocket up here to 93.75 on the US dollar. What would that mean? Well, we've been operating in scenario 1 coming out of the Fed. What was scenario 1? Stable to falling yields. Yields have been falling. Stable to rising USD. Dollar's been not only rising, but rocketing higher. And we've seen the fallout from that being bullish FATMAN, bullish bubble stocks, bullish EV, bullish solar. It's the anti-reflation trade, because the flip side of that is bearish financials, bearish industrials, bearish materials, bearish commodities, bearish cyclicals, bearish reopening. So that's exactly what we've had over the last 3 days coming out of Powell. Now, going forward, I just showed you that TLT was right at key resistance at the 200 and the downtrend line. If that reverses and it was just a head fake, then you're going to see people going back to the banks, back to the industrials, back to the materials. So we're at a key spot. So even if you don't trade the dollar and rates and TLT, keep it in the crosshairs, because it's really kind of driving everything. The one chart that I found most interesting coming out of the FOMC was oil. Why? Where you saw copper and all the commodities get decimated, all the reflation stuff decimated, oil held its bid, and it's still sitting up here on the 8 EMA. And it means one of two things. One, it's just a delayed reaction, and this is gonna roll over and come back to back test this breakout, or there's a structural bid in oil due to these factors that I've noted down here. So watch oil very, very closely. And if this does roll over and comes back to back test this breakout, I'd be a buyer there. I'm still bullish on oil. I think you got the world reopening. I think OPEC and Saudi in particular are in control. U.S. producers, muted response. They're not going to go out and punch a bunch of wells out there right now. They don't have the capital to do that. So I think there's going to be a muted domestic supply response. And, every week you see U.S. production trickling down, not going up. So I think Saudi's in control, and I think they're happy to, keep production discipline. And maybe that's what we're seeing with oil continuing to hold a bid. And plus, all the stuff we've been saying all along, I think domestic energy policy has done a 180 from Trump, who, we want to be energy independent, drill everywhere, support the industry, blah, 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 to the political class saying we want energy high. We don't want to drill everywhere. We want to make it hard for producers to produce energy. We want those prices to go up. Why? Because that will accelerate the push towards green energy. And I think $120 oil would thrill the greenies. I think they want it high because, like I said, that will accelerate the adoption of EV. So, anyways, enough of a rant on that. Let's get into the indexes. I've got an open gap here from Friday, had a down move. We closed inside this prior gap. And before I forget, I think it's important to note that there was a dividend on Friday for SPY. So these levels changed with the dividend payout. So if you notice different levels than they were midweek last week, that's the reason why. So we've got this opening gap down. We came down and closed on the lows inside this gap. And I think the key here is the gold EMA and the bottom of this gap align right here at 413.25. If you get a flush move this morning, we're up a little bit now, but if they bring it down and close this gap and tag the 50, you want to be a buyer there. Why? Because that first tag of the 50, just like back here, resulted in a healthy tradable bounce. I think you're going to get the same thing here. If you get that move to fill the gap, tag the 50, get long with a stop just below, and see if we don't get a big bounce. But short of that, remember, as price moves higher, and recapture these levels from below, those are buy points. So right off the bat here at 415.50, if price comes up and takes that out, you can get long. You can get long, 417. You certainly want to get long into the gap at 418. And so you've got some very well-defined levels here on SPY where you can target getting long. This is just the exploded view on the 30-minute chart. That gap is down below and off the scale, so we don't really see that here. But on the way back up, here are your levels where you can either get long, or if you're already long, you can always roll up your stops and your strikes. And just be aware that there is some intermediate resistance inside the gaps. Just because you enter a gap doesn't mean it's an automatic gap fill. They may make it difficult by, coming up inside the gap, then get rejected, then move up. So it's not always a unidirectional move into the gap. You got to be aware of that lateral resistance that comes in periodically, inside the gap. So be aware of that. Moving on to the Qs, totally different look than SPY, or as we'll see later in IWM. Why? Yeah, it was down a little bit, but they didn't bury it. They held this 342, which I view as a really important level. And I think that's your pivot today. Anything north of 342, you can be long. If you get a recapture of 344, that would be a buying level with an eye towards moving up to the all-time high and possibly even taking that out. But the flip side of that is you lose 342. I think you get short there and look for a move to retest these lows, possibly even this low all the way down here towards 337. So I think it's pretty clear on the chart. 342 is your pivot. And then here on the exploded view, you can see that SPY spent most of the day on Friday just oscillating between 342 and 344. I think, those are the critical levels. Now, Qs are up a little bit this morning, may even open above 344. I didn't take a look at it, but just remember then you'll have a gap below that needs to be accounted for when you either get a gap open higher or a gap open lower. The first thing I like to do is just mark that gap on the chart and then see how price handles it later in the day, whether it just goes down to try and fill it immediately or it goes the other way and that gap would remain, for the days ahead. But you can see that I marked this, I think it's only like a 50-cent gap up here on QQQ from Friday. Not significant, but it is still there. IWM, bad day at the office, down 2.27%. Remember that IWM more or less is a proxy for the reopening trade. Loaded with banks, loaded with cyclicals, loaded with reopening names. So those have been under pressure as the reflation trade and banks, etc., have been selling off. So here's the sell-off over the last few days. So Friday we gapped down, and we're down here around 222. We filled this gap. I left it in there just for reference because those levels may have muscle memory in them. So, you get a little move up and then it hits the top of the gap and gets rejected. I think there's a beefy overhead resistance zone right here between 224 and 225.50. Why? Because, well, for one, the gold EMA is the 50 EMA on the daily. So we're below the 50 on the daily, and also 225.50 was a big level back here where price had a hard time breaking through until it finally did, but now it's below. So all this stuff here at 225.50 is now resistance. And if the cyclical trade remains under pressure, I think IWM is going to have a tough time grinding back above the 50 and this 225.50 level. So I view that as a pretty healthy resistance level. And if price did make it up to 225.50, I'd be inclined to be a seller there with a stop above. We've got a downtrend line there as well. So I think that's going to be a tough nut to crack for IWM short term. And notice the posture of the indicators. RSI has gone bearish. PPO has dropped below zero, which is bearish. So, and obviously we've got price coming back in a bearish posture as well. And then here's the 30-minute chart with the same information on it. If we go up a little bit this morning and then break Friday's low, then whenever you break a low, that's always a sell. Whenever you break a high, that's always a buy. So if we lose Friday's low, then we're heading lower. And I've got some levels here down around 220, and then there's another gap down at 219.75. Moving on to FATMAAN. Friday, we discussed this big $8 trading range, and we were up here at the top. By the end of the day, we were at the bottom. So this trading range between 330 and 338 has contained Facebook for quite a while, going back to early June. So today, I think you use 330 as your pivot. And if you can get an entry above 330, but still relatively close to it, I think you can get long and then look for the first target of 334 and then a second target of 338. But if for some reason price gets soft or there's further volatility and downside corrective activity, if you lose 330, you got to get short. And I think you're going to come back down in here to 326 almost immediately. And as we discussed on Friday, your measured move would be 322. $8 from the trading range below 330. Your target would be 322 on a measured move basis. Moving on to Apple. Nice uptrend, taking out this 128, which was our mega level on the daily. And now we've backed off a little bit down here to 130.50. You kind of want that to hold, or else you could come back into the 129s and possibly even a complete back test of this 128. And if you got that move to 128, I would be a buyer there. Why? Because it had spent a lot of time underneath building a base below 128, spent a lot of time trying to get out, and then finally has. So if you get a back test of 128, there should be a lot of support there. And as we talked about, you've got 20 and 50-day EMAs on the daily that are now support below price. So I think that would be a very objective level if you got it to try along there. And not just from a day trade standpoint, I would be willing to go out in time a little bit, a couple weeks, a month, whatever, and shoot against this 128 and count on that holding. And of course, you've always got to stop just below in case you're wrong. But if that's going to hold, if this comes back and does hold, Apple's going higher. If it fails, then this whole thing was fake. And what might trigger that is if rates start rocketing higher, right? This has been in falling rates. And so if this comes back to 128 and, rates start doing a moonshot, that's going to be a headwind to tech. So that's why you got to keep yields in the corner of your eye. And as long as you see yields either stable where they're at, in the mid 1.4% range or lower, you should be okay being long tech. But if you see rates, 1.5, 1.55, 1.6, you're going to see tech and the bubble stocks and ARK and all that stuff start to reverse. Tesla. Thought we had the breakout here Friday. Didn't happen. It poked above 625, but then fell back below. 625 is your pivot. I think if price takes out 625, you want to get long with a first target at 640 and a second target up a little higher. I don't have it marked, but I think would be around 655. Why? You've got a nice trading range here between 595 and 625. That's 30 bucks. 30 bucks onto 625 is 655. So my first target would be 640. My second target would be 655. But then T3 would be 670, 675, something like that. So look for a breakout here. If you don't get it, it could be subject to backsliding, all the way back down towards 595. Not much activity on Microsoft on Friday. Price took its time, but eventually filled this gap. Remember, the all-time high is just above 262. I'd have to go back in the chart to get that exact level. But if you're not involved and you get that breakout to all-time highs, I think you want to buy that. Just as we talked about, whenever you break a low, you want to sell. Whenever you break a high, you want to buy. So it's been a little choppy in here, but as long as tech is working, I think Microsoft is going to work. The only thing that would change my mind there is, like I said, rates going a lot higher. Then you may see price come back down towards the bottom of this prior gap. So just thinking ahead, we've got this was a $6 gap. So on a breakout, on a measured move basis, I'd be looking for 268. $6 on top of 262 gives you 268, and that's what I'd be looking for as a first stop on a breakout. Amazon remains really strong. What I did here, we had this nice uptrend. I dropped in an intermediate midpoint line of that channel. You can see that in the early part of its move, this midline acted as support. You dropped below, then hit the bottom of the channel, broke back above, and now we're back at the midpoint. So whenever you have either a rising or falling channel, you can put a midpoint line through that, and what you'll often see is that acts as support and resistance within the channel. So from looking at this, if we were to have a down move this morning in Amazon, I would look for it to come back down to the bottom of the rising channel, and I would be a buyer there with a stop just below, and then look for a move back up. Otherwise, a breakout above 3,500, you got to buy, with a first stop being 3,550. Amazon has been strong. I don't want to go back through the whole thing, but we had these levels identified. We've had this the whole way. If you're long, stay long. Keep ratcheting up your stops and your strikes to make sure you get paid. But if you're not in and you want to trade it, get long over 3,500 and look for a $50 move higher. These $50 increments have worked like a champ, and I expect them to continue doing so. Google had kind of a, I don't know if a 1 3/10 drop is a rough day, but it had a down day on Friday. So now we're back here to 2,400. That's your pivot. You can be long above, looking for 2,420, 2,435, and then 2,450 back up. If for some reason you don't want to mess around in here, still alarm 2,450, because that would be a breakout to new highs with blue sky above, no natural sellers. I think you want to be long there. But this morning, if you get something close to 2,400, I think you want to try along there with a stop just below. And then if it fails, it's obviously going to come down. But I don't see a massive opportunity on the short side on Google. It's been very strong, and I'd be looking for long entries rather than short ones at this time. Netflix didn't really do anything, still chopping around. I think you can be long against 500 more or less and look for a move to 507.50 and then 515. And anything under 500 is vulnerable to a pullback towards this 485 level. But like I've been saying for a while, not a lot of enthusiasm here for Netflix for quite a while. And, if you're interested in trading it, set some alarms that would, pique your interest. But it's tough to make money on a $500 stock that's moving $5 a day. The only people that win are the people that are selling options and the market makers. So keep that in mind. And then let's finish up with semiconductors. This one was a head scratcher for me on Thursday and Friday. We were up here. We had the breakout, moved up here to 256. Then they sold that off pretty hard. It was down 2.5% on Friday. We lost this 248.50, which was an important level. Now we're down here midway between 248.50 and 244. Looking kind of weak. The only ones that have been strong have been AMD and NVIDIA. There were a lot of names that were off 3, 4, 5% last week. So a lot of weakness in semiconductors. I would keep an eye on that. I wouldn't take a trade right here. I think you got to wait for 248.50 to be recaptured, or get a move down to 244 where you could try a buy, try along with a stop just below. The really big level is 242.50, and that goes way back in the chart. If for any reason semis lose 242.50, you got to get short there. Why? Because that would make this whole breakout look fake, and then all these people will realize that they're wrong. And what you'd probably see is these lower gaps fill and have price come all the way back to 233. So have that level alarmed And if you're a bull, you hope it never fires, because if it does, then we probably got bigger fish to fry on the downside of semis and tech in general. So let's wrap it up here. Longer video, but important coming out of Powell to see how we're positioned, see what the setup is in the market. And I want to make one last point. We had a massive options expiration on Friday. Why is that important? Because all of the, gamma pinning, call walls, put walls in the option chain, they're all gone. They all rolled off on Friday. So now for this week, it's often a week where you see some added volatility because there's a wider range available for trading, and there aren't these structural support and resistance levels on the option chain. So I'm not saying it's going to happen, but after big options expiration, you often see some added volatility and can often lead to a market inflection point. So let's see how it goes today. Hope you found the information helpful. If you know somebody in your trading group that might benefit from the information, please go the extra mile for me and pass the link along to them. I'd really appreciate it, and hopefully they will too, with some actionable information that will help them put on more winning trades. So this has been Chris Buss with Traders Profit Compass. Have a good trading day. Talk to you next time.